Jeff Dennis, independent emerging markets commentator, joins in. Jeff, good morning and welcome to the show. Always a pleasure to speak to you as well. What do you really make of the headlines that Donald Trump has actually grabbed right now? He's lowered his stance when it comes to, Greenland, and the tariffs when it comes to EU. This is something which is spectacular in some way. Indian markets, to an extent, are seeing a sentimental impact as well. Your take?
Well, Bloomberg, I think, caught it right. They've got a report out this evening that says it's territorial taco. In other words, vis-a-vis Greenland, we have a Trump that is again chickening out. Now, what's interesting about it is that it's a sudden change of mind. Obviously, his speech to Davos was a little bit softer than I think some people expected, but to actually talk about having the framework of a deal tonight is something that we did not expect, and nobody else, I think, particularly expected it. Now, what's interesting is this framework has been put together ostensibly between Trump and the head of NATO, Mark Rutte, the former Dutch Prime Minister. There's no suggestion that Denmark was involved in those talks. It rather reminds me of the Ukraine talks when Russia talks to the US, and now we've got the Greenland talks where they don't talk to Denmark, the US talks to NATO. So I don't know how much agreement there's going to be on whatever this deal is, but obviously the markets reacted well because it was an unexpected gift, if you like, to the markets today, because the immediate threat of tariffs on European countries is gone again.
Jeff, hi, morning from where we're at least. And the question is that, is this going to be durable? And one assumes that that is in the case. And the commentators that you've read and you've heard over the course of 2026 is that how do you price risk at this moment? It's really hard to do. Would you agree?
Yes, I think it is very hard to do. Will the deal hold? I don't know. I've got no idea. I've always thought, and then I was getting worried that I was going to be wrong, that the US would not invade Greenland militarily. Maybe that risk has gone down now as a result of the events of the last 6 or 9 hours. If there is a deal out there, I think it seems to be likely to involve the mineral resources that Greenland has enormous supplies of, in particular, some of the rare earths. And also, it's probably a deal which everybody could see was possible anyway, which is that the US would start to put more troops in Greenland as a defensive measure against China and Russia. In other words, go back to a certain extent to where what the US strength was before the Cold War ended, or during the Cold War. This was an obvious solution as opposed to Trump invading Greenland or indeed seizing it, wanting it for the US itself. Now, I've argued also in stuff I've written that this is going to be the year of geopolitics. If 2025 was the year of technology and AI, this is going to be the year of geopolitics. And I think how we price this is very, very difficult. It's sort of event by event. But what I will say is, having had a terrible day a couple of days ago, the markets, because there were real fears of a military invasion, you take that off the table and the markets bounce straight back. In other words, I think there's still an upward trend to equity markets worldwide, as long as you don't get any major negative shocks. And I think taking apparently an invasion off the table with talk of a deal just gets equities going again. And I think that's probably very good for markets over the long term.
Jeff, just that, while under normal circumstances, good evening to you, Neeraj here, while under normal circumstances, this would be a market which could potentially be a screaming buy, or select markets around the world could be screaming buys because of the correction thing that has happened. Are these normal times, and therefore could the pain get extended for a lot longer before normalcy were to return?
I doubt it. And obviously, it depends on events. And as I say, this is a year of geopolitics. It's not a year of, I think, AI or possibly even general macro and market fundamentals. There's going to be a lot of geopolitics events, is my view. But I think the important thing is markets seem to want to come back. And I think that's good. And you've probably got 2 Fed rate cuts this year. You've probably got a world economy that's going to do decently. You've got a US economy which is going to do pretty well, I think, this year, probably growing 2.5, maybe even 3%. And so I think the fundamentals are there for markets to do okay. And, from my point of view, I'm not taking a lot of risk equity out of my portfolio right now because I think that the macro fundamentals and the market fundamentals are still okay. I don't believe we're in a major bubble at this point. Therefore, I think any sell-offs will create buying opportunities. But of course, as you're implying by your questions, and I think my comments as well, we just don't know what the geopolitics is going to be like. And it's been a topsy-turvy where are we now? First 3 weeks of the year already. And so geopolitics will rule. And I think it's going to give us a lot of volatility, which almost certainly means emerging markets beat developed markets in 2026 like they did in 2025. And we get a lot of volatility, and the US probably doesn't go up as much as it did last year.
Ah, that's an interesting point to make as well. But thank you, Jeff, so much for joining us on the show. Always a pleasure to speak to you as well. And I think this is what will define the course of the day to some extent, with that 150 points up move that we're already seeing in terms of an indication coming in.